Hey, welcome to the Closing Beat, everybody. Happy Thursday. How we doing out there? Good? Brother needs a haircut, man. Hope you're having a good day. This is our quick stock market update show. We call it the Closing Beat. It's just a fun way to reference our name, Jazz Wealth Managers. We are financial advisors doing things a whole lot different than everybody else. We like to teach you, and one of the ways that we share our knowledge and things that we're researching is doing this show here for you. It's free, it's open to the public, and I'm thankful for all of you who are watching. Also thankful for those of you that have joined us. I know it's difficult to gain the trust of people out there. Advisors get a bad rap. I don't come from the advisor background. I don't work for the big guys or anything. We do our own thing here. And I just want to say, this week, we are 6 accounts away from getting more customers in 1 week than we've ever gotten. So really appreciate it. Big support there to you guys, or big thanks to you guys for supporting us. And man, I will keep it up. We'll just keep giving you everything here. Hope you enjoy it. And so let's get started here. The market sold off today. Is that odd? You know how I like to say, oh, it just seems weird, does it not? Well, stick around because we got all kinds of good stuff here today for you, as we normally like to do. And we missed yesterday. We had a hurricane day. We're all fine and safe, a lot of water and stuff, but man, it hit right here. So nasty one there. The odd part about the stock market, not odd at all. I'll actually share that data with you here today. You can see the Dow was down just over 1%. The S&P lost 1%. NASDAQ a little bit. The Russell 2000 pulled back the most on the day. And I'll tell you what, if you like the markets and you like playing around, you see the Dow up there, 29,079.51. If you can tell me where the Dow is going to close, closest without going over next week, I'll send you a $100 gift card, or if you're one of our customers, we'll credit you a $100 to your account, and it doesn't count towards Roth contributions, IRA contributions, or anything like that. Our customer, Mike Meltzer, won last week, 28,301 even was his guess. In second place, Terry Messenger, but second place doesn't win anything, so got to try again, Terry. I'm sorry. Hey, we don't market to you or anything. If you just want to play a game, you're welcome to play with us. We don't play games in other, like marketing to you or selling your emails or anything. No way. All right, let's take a look at the markets here and see what we got. Here's the S&P. We started off the day a little bit negative, and we spent the rest of the day selling off. I give you in the morning, we tried a little bit of a rally, but ultimately the market's pulled back, and it's not odd at all, I'll tell you that. The small attempt at rally that we had just pulled back there, but we know weakness is ahead because I shared this chart with you already earlier in the week. The S&P had a 2% gain on Monday that made new all-time highs. We said, well, that's kind of weird. Let's see how many times that's happened in the past, and let's also see what the forward performance was. And we say, you know what, going forward for the rest of the week, it tends to be a little bit weak, right? Tends to be on the weak side there. Add to that, 60% of the stocks in the S&P 500, just over 60%, were overbought, meaning they got a little too excited to the upside. You know how I feel about that stuff there. If we look at the S&P today, look at some of the stocks inside of there. It's the same stocks, man. Amazon dragged down on you just a little bit. Microsoft was one of the biggest drags overall. But today you had banks. You had Bank of America pulling back after its nice day there. You had Berkshire Hathaway. We'll go with the B-class shares to show you. Big, huge move early in the week. It's just pulled back a little bit there, so not a huge deal, but for the S&P 500, that's what held you back today. We take a look at the NASDAQ. That pulled back a little bit today as well, and I'll ask you again, is that odd? It's not odd, right? I'll tell you why it's not odd, because if we go over here, nope, we're not going to go there. We're going to go over here, and we're going to go to our research site. If you take a look, if you're a member of our research site, go right on in here. We put, Cody did a post for us on NASDAQ performance for the day of the week. The NASDAQ actually has actually given back 9.5% percentage points of its year-to-date gains on Thursdays. Thursdays has been the worst day for the NASDAQ overall this year. So if you're interested in a research site, it's something that you can certainly participate in. Well, I'll just go to NASDAQ real quick. There you go. So Thursday pulling back there just a little bit. Not too big of a deal. We know it's normal. If the NASDAQ is going to give back some of its gains, it tends to give it back on Thursdays there. And I'll say, if you're interested in a research site, you can't be a customer. It's free for customers. But if you can't be a customer of Jazz Wealth, you can also join our research sites. $13 a month, very cheap and inexpensive for what you get there. I happen to think it's a good deal. We post lots of cool geeky stuff there. And you would have already seen with our post there that Thursdays, 9.5 percentage points are given back on the NASDAQ on Thursdays. If we look at the charts today, you're going to see Amazon was one of the big drags on the day there. Yeah, there it goes, loading up for us there. You got Tesla was one of the big drags as well. Microsoft and Intel. Those were your biggest drags on the NASDAQ here today. Intel being by far the worst performer of all of them there. If you look over to the Russell 2000, a little bit of a pullback today, but this has been one of the best performers over this week and a little bit later in the last week as well. We covered some of the data to show that with you, how the Russell 2000 was way ahead of where it should have been there. And so a little bit of an overbought pullback in the Russell. Nothing to worry about. If you look through the different areas of the Russell, small cap value did see a little profit taking today. Not too big of a deal. If you like learning about the markets and research, take a look at our FinTips videos. This week we did a planning focused week. We did some planning based on using home equity for retirement. Yesterday we did the idea of stopping investing and paying off debts in terms of rental properties and your mortgage and stuff to see if that would have a better impact on a retirement plan than simply investing for retirement, kind of an odd thing for an advisor to focus on. Our research site, we talked about some of the cool stuff there. Cody did that post I just shared with you, and I went over some of the BLS data to show you how it affects leisure stocks going forward. Leisure, hospitality, things like that, if you want to take a look at those. Tonight's our Wine and Wealth class for customers every Thursday. Grab a drink, come hang out with me in the speakeasy back over there. And tonight we're going to cover some of the upgrades to nest eggs, some really, really cool ones that I know have been asked for a lot. We've gotten your suggestions in there. They have been developed and launched, so we're going to go over the updates, ways to calculate refinance costs in there, additional ways to segregate your pre-tax 401k with your post-tax, like your Roth 401k. Cool stuff in there for all my personal finance and planning geeks out there. Hey, let's go to the sector breakdown, take a look and see what we got here today. All right, 10 of 11 of the S&P sectors were lower over the last 10 days, have gained 10%. In other words, well, I'm just going to show you. Let's do it like this. Let me go over here. There we go. Here you go. So today, every single sector in the S&P was lower. You can see it on our little tool here that we're working on building, and I've got a cool thing to share with you today. But the bottom line is 10 of 11 sectors' performance over the last 10 days ranks in the top 10th percentile of all of its performance. What does that tell you? What does that mean? That's a geeky way of saying they perform better than almost every other time in history. 90% other time in history, they have performed better in the last 10 days. Overbought, right? Tells you a little bit about being overbought there. If we go over to some of these, consumer discretionary is the only one that doesn't make that list. That's the 11th one that did not participate there, if you want to take a look at some of that there. Now, financials, industrials, materials, and energy continue to lead. So we go financials, industrials, materials, and energy. Although they were weak today, these are your leading sectors here over the last month, all up over 10%. Before today, right? They pulled back a little bit today. These four names have only led the market rally, which it's doing right now, being up 10% or more in 2 weeks. They've only done this 3 other times in the last 50 years. So in other words, industrials, financials, materials, and energy usually do not lead the markets higher, but in the last 2 weeks, I've shown you, they are leading the markets higher. That's very, very rare. In every one of those cases, by the way, when industrials, financials, materials, and energies led the market higher, in every single higher, right? So in every single case, if you look out forward there, sorry for the blip, but if you look out forward, 6 months later, stock market was always higher when those 4 sectors led the market rally over a 2-week period. Really, really cool if you ask my opinion there, getting to look at some of that stuff that's kind of odd. All right, let's go over to energy. Today was the big downside mover. Energy was weak on the day, continuing to just pull back a little bit. By the way, if you go back here, energy, right, go 5 days there, energy is beating any other sector by at least 2 percentage points, 2.3 to be exact, over the last 5 days. Very strong. But if we look at energy here, today was the week one. You can see on our scatter plot, every single stock was lower on the day. If we rank them by contributor, you've got ExxonMobil and Chevron as the weakest there. And we got something new for you. If you click on any one of these symbols, and this will be launched soon to our research site, so I'm just showing it off just to get feedback and stuff. But if you click on any symbol in the list of all the stocks in the energy sector, the scatter plot changes. Did you see it? I'll go back to the way it was, and I'm going to click on Chevron. I'll just go over here and say Chevron. Now what happens is Chevron gets highlighted in black to kind of show you the weight, the return over whatever time period you're looking. We now have the industry put in there so you can compare if one industry is weaker than the other. Remember our semiconductor conversation from the other day. But if you look elsewhere, there are 2 big red blips on the screen. They're red because they were down on the day. These are the stocks most closely correlated to whatever you've chosen. In this case, Chevron is what we chose. So you got ExxonMobil, weak, and then you come over here and you go Occidental Petroleum. These 3 stocks are the most closely, or these 2 stocks are the most closely correlated to Chevron. Chevron was the best performer out of its peer group, and we'll just call it a peer group here. So I'll uncheck that one for a second. Go over to Phillips 66. Phillips 66 down 7% on the day, and you can quickly see it was the weakest out of its peers. So in other words, if you were saying, all right, oil, gas, and transportation, if they were the weakest, right? If Phillips 66 was the weakest, show me the strongest stock out of that group. Maybe this is the industry you want to invest in. You could very quickly see, over here, Holly Frontier is holding up. For whatever reason, it's doing better than its peers. So a new adjustment there. Really, really cool if you ask me. But anyways, taking a look at the sectors for the day, consumer staples ranks at the top. Healthcare didn't pull back as much. Actually had a little rally towards the end of the day there. Energy as well, although it did bounce off of its lows for the day. You can see over here right at the end of the day, almost everything bounced a little bit right as we go into the close there. And so that's what we have for the sectors. Let's go over to our watch list here for the day. We're going to talk about, I'm going to get rid of this guy. We'll go back over here. We're going to go to our watch list. All right, in the research site, I'm going to do a video because I think it needs to be explained by video. This is a little bit complicated one that we're going to do. What we did is we said, okay, we know we've got industrials, materials, energy, and financials as the best performing sectors over the last 2 weeks, last 10 days there. So what we did is we actually took every single sector and we said, okay, whenever that happens, let's just include every sector and look at the forward performance of how they do. What's the forward performance? How many times did it happen? Average going forward, all that great stuff. And so what I'm going to do is do a video to highlight each one to show you what the best performing sectors are going forward, 1 month, 3 months, 6 months, what the worst sectors are going forward so that you can have a quantifiable sort of geeky way to see what to expect. Well, today for our watch list, what I'm going to do is share with you the 4th best performing sector. That's the industrials, right? So if we look at the industrials, what we're going to do, we're highlighting industrials because it's been one of the leaders. You can see that from our research site there. We're looking for the strongest patterns in the industrial sector. If we know to expect that it's not the best performing sector, but the 4th best, what stocks inside of it do we want to look at, put on a watch list, and see about investing in there? There are 73 S&P 500 sectors here, and we're just going to start with a couple of them. You got Boeing. Boeing, an interesting technical pattern, breaking out of this really shallow downtrend. They've also got good news coming out forward here with the getting the 737 MAX up in the air there, so really exciting there. We all know about what happened to them and why it fell. I don't need to go over that again, right? We go over to C.H. Robinson here, it's a transportation company. Disappointing earnings, by the way. This is what that blip here is. Disappointing earnings, but it created a discount, meaning the stock has fallen in the meantime there. On the conference call, I looked through the transcripts just for fun last night. I was reading through it. They had a lot of good things to say. The issue is that they think it's going to be a little bit weaker going forward. It wasn't a very good earnings report for them. But here's what they said. They said that the cost paid to their truckers was down, largely due to less fuel costs there. And the cost charged to customers was up 10%. It's not amazing, but it's showing a little bit of a recovery in this stock. Also has an interesting pattern that it's discounted here, and we know it's in a sector that has one of the best performance going forward after the move that the sector just had. So hopefully that didn't scare you there, but a little bit of a geeky stuff there. All right, so we've got Dover here. It's a breakout that's pulled back on top of this range here and so far is holding. Not to mention, it's a breakout to new 52-week highs, and it's holding above those 52-week highs at the moment. I thought that was rather interesting there. You've got Eaton Corp, used to be Eaton Vance, I believe, or Eaton, we're looking at industrials. Same thing, breakout to new highs, pulling back on top of it. You kind of hope it pulls back a little bit more there. Same story, and you've got earnings behind you. We've already had the earnings here, that's over with. You had a decent response to that, and so you're sitting at new highs with a sector that's historically known to be strong going forward. I'm not saying to buy these stocks, you get what I'm saying. This is just a watch list here. All right, Equifax up, now 8% over the last 5 days. Could be breaking through this downtrend. You can see it, right? I mean, it's not that hard. I'll draw a simple line here for you. Could be breaking through this downtrend. Today goes a long way towards proving that with the gain above the downtrend. You can see the volume was very strong in the background there. Really, really exciting to see Equifax starting to perk up and a strong gain on a day today when otherwise the markets were lower on the day. So nice there. Looking at some other stocks here, we'll go down the list. You got Honeywell, that's also on your list off to the right-hand side of your screen. This is the biggest contributor month to date, little bit extended, and what do I mean by that? So we'll go over here, we're going to go to industrials, and what I'm going to do is just change the time period. I'm going to look, instead of looking at 1 day, which is the default here, go to month to date, and we're going to look to see, hey, what do we have here? Boeing, Parker, nope, not them. Biggest contributor, we'll sort it like this. There you go. Biggest contributor down here at the bottom. And if I click on it, we can see very quickly it's the biggest contributor. The y-axis is the gains. So there's no other bubble that's higher there. Biggest contributor month to date is Honeywell there. A little bit extended. If we go over to the chart here, we take a look at Honeywell. Obviously had a good move after the dividend came out, after earnings response and everything. It's held the Monday bump that we got there. It's also flirting with making new highs again, right? So it's already there. It's just kind of holding tight, maybe not pulling back as much as you like, but I like this one. If it starts to pull back, maybe something to look at there. And lastly, we'll take a look over here at global payments. There we go. So you got global payments breaking out of this downtrend. It pulls back yesterday, it pulls back today. Where does it start to bounce? Do you guys know bottoming tails there? You know what we're looking at there for bottoming tails? You know what you're looking at, right? I'll give you a little sample. If you go over to our video library here, if you're one of our customers, just type in candlesticks. Right? If you type that in and hit go, there you go. It's actually going to show you. I did 3 classes to start with the basics of candlesticks, then get a little more advanced, right? So basically what you're learning from this is as it pulled back today, it stopped on a dime and started to find buyers. Where did it find buyers? Interestingly, right at a technical support area. So I found that interesting. A little pricey, $184 stock there, but it's a breakout that currently is holding. You got the moving averages coming back over the 200-day again. I thought that was really interesting, and that is your watch list for the day. Hopefully that helps you. All right, let's go over to stocks in the news here. We'll let the stream catch up. I'll take your questions. Chinese stocks going to be the name of the game today. Pinduoduo, a new addition to the NASDAQ there, up 20% on the day. So Pinduoduo really benefited from the Singles Day, which if you don't know is 11/11 in China, big shopping day over there, and it's called Singles Day. I think it was made by Alibaba. They created it, but anyways, big shopping day. So they benefited from that, up 20% because it also reported better earnings and revenue than expected as well. Speaking of Alibaba, we'll go over there next. They finished the day down just a little bit. They had earnings as well. Oh, no, I'm sorry. This was from Singles Day. 74 billion. What did they make there? 74 billion on Singles Day for revenue. A little bit light, I think, overall, but not bad for them. All right, taking a look at Alphabet here. You know, YouTube went out last night, thankfully after our show aired. But YouTube was down for a few hours. It's fully back up again. Not much volatility in the stock there today, but that's what you got. Vroom is the CarMax Carvana competitor, mainly the Carvana competitor there. So if you take a look at Vroom there, they beat on earnings by 8 cents. Total units sold up 59%. The problem is they're still losing money, and they said they still expect to lose money. Not only that, they expect their losses to widen as they go through hyper growth mode. So the stock made new lows today, down 13%. We'll go over a couple others here. You got NV5 here breaking out to new highs. This was our biggest mover today. We happen to own the stock. It's up about 8% on the day. Got upgraded by Roth Capital up to 82, sitting at 69.50 right now. They see quite a bit of upside there. If we go from where we're at today to 82, they see about 15% more out of the stock there. I'll cheer them on. I hope they're right because we own it and we'd like to see 15% as well. Am I right? I like it. Okay, that's pretty much it I have for that. Let's go to Disney. Disney after hours, where are they at? Trading up 3.6% at 140.5. So right about here. That's going to be earnings related. Earnings not as bad as they thought. They were expected to lose $1 billion, man. They didn't lose $1 billion. They got 73 million Disney Plus subscribers. Shanghai has reopened again. Their Shanghai Disney has opened, so that's good news for them. They don't own the whole thing if you're really geeky about Disney like I am, so it doesn't really hurt them the fact that they were closed. But anyways, reopened there, so it's good news for them. And that means I owe them a Disney. I owe them a Disney fact. You asked for a Disney fact. Okay. Disney fact. Anytime I say Disney, I'll give it to you. What do I got? Okay. This one's, I'm going to go Epcot. So, been to all of them. If you have any questions about Disney and how to visit there and anything, happy to help. Go all the time. Love it. Haven't been in a while. So, if you go to Epcot, what you're going to do is walk around, go to the left. Go left, walk around, stop at the Mexican Pavilion. They got a cool little boat ride. It's childish, but it's cool. You're going to go around all the way to the back to the China Pavilion. Go right to the center of the China Pavilion, wait for some people to get out of your way, and just start talking. It's the coolest thing ever. You just start talking. It's a massive looking building. But if you start talking, it's built acoustically so that your voice goes in and comes right back at you. So as you're talking, you will hear yourself perfectly. It's kind of funky to hear it, but that's your Disney secret of the day. Not a lot of people know that. They didn't know that. Yeah. Well, you got to go to know it, right? Like you have to actually experience. Cody doesn't go. He's never been. Anyways, that's what we have. Okay. What else do we got? We'll wrap it up from here. You got dividends. Amgen paying out $1.60. Rockwell Collins $1.07. Nice. KLA 10 Core paying out 90 cents. Southern Co 64 cents. What else do we have? International Paper 51 cents. That's pretty much it there. A lot of shuffling going on. The S&P 400, 600. So careful there if you're doing your thing with that one there. I'll take a look, see if I can answer some of your questions there. If I can't, then we'll wrap it up. You know what I mean? You guys like your Alibaba pullback? Nice. Cool. Chinese stocks, they've done well. Yeah, Chinese stocks have done really, really well lately. Yep. Oh, yeah. You think the market's overreacted to vaccine news? Could be. Could be. I like it. I love it. I see you guys talking about Pfizer in there. Yeah, I mean, Moderna was in the news today. They're likely next to have that conversation about the vaccine. 6.5%. I think Eli Lilly or Pfizer, one of those two, has a stake in Moderna, or they're licensing partners or something. I don't follow these so much. It's just a sector or industry I'm just not too interested in. But yeah, that's what it is. Cool. Well, I'll wrap it up from there. I want to make sure I do have everything covered for the day. I appreciate you guys hanging out. I'll get ready for our class here tonight. Some really, really cool stuff with Nest Egg that we're going to cover. So if you like planning and stuff, come hang out. Worst case, come ask some questions. If you're one of our customers, I'll stick around and answer all the questions you have till we're done there. So enjoy the rest of your evening and day. See you tomorrow.